Okay, good morning, guys. Just let me know if you can hear me. Otherwise, we'll just get started. Got my headphones back on. I think I figured it out again. Seems like it's Bluetooth, and you've got more than two things. You can't have more than two things connected. And I had both my phones connected. So now we're back up and running. All right. I'm assuming you can hear me okay. So we'll just get up and running. Welcome to Trade Setup, and it's the overnight overview, I guess. Morning overview of what happened in the previous session. So that was a Friday night session in the US. It was quadruple witching. I don't know if anyone knows what that is, but it's when the futures options and everything, there's a few different things that expire on the same session, the derivatives, and there's all this positioning out and in and all that sort of stuff. So that it just creates a bit of a, whether it's a thin market, a bit of volatility into the market. So that was on Friday night. But what they had also was China was meant to visit with the US, visit a couple of farms, and they pulled the pin on the last minute. And you could see that around when the news hit the market towards about 3:30, 4 o'clock, I think it was our time, AM, when that hit the market, and it seems everything sort of changed direction pretty much on a dime. So the indexes started selling down hard. The Dow was already on the back foot, I think, and the S&P was already on the back foot when that came out. Let's just go and have a look. What do we got here? This is Wall Street. You can see that. What time was that? 3 o'clock, sorry. So it looks like that's when the news hit, and then bang, we come sold off into the close. Got another bout of selling around the 4:30 mark into the close. US dollar rallied. Actually, that was rallying from the start of the European session, so that bounced right back from the previous session's losses. It looks like the market has gapped up today, which I didn't, to be honest, didn't expect. I thought it would be more, neutral to flat, but a lot of the time they can gap up, wash out, and then continue the way, potentially in this case, continue its way south. So I think what that did was just show China's hand a bit, maybe, that they're not willing to make a deal just yet. They would be, if they're willing to do something, you would have thought, or if they're willing to make a deal come October, when there's a high level meetings apparently, then you would expect them to actually put in a bit of effort, I guess, and do the rounds and sort of not stuck up to the US, but look like put a show of it, make a bit of a show of it, which they didn't. They pulled out, which that's not a good sign. I don't think the markets didn't take it as a good sign. It just, all that sort of hope the market built up probably last week or the last few weeks into a trade deal getting done. Whether or not that's, I guess that's gone now, or whether they're just reassessing the situation, going, look, it's happened before, and it's the cracks are appearing again, where it's going to happen again, where there's going to be no deal, and they've talked it up, and nothing's happened, and we've reset ourselves at new highs, and nothing's happened. So we'll just sell off, take off some risk off the table. Now, potentially that's what it was on Friday night, a reaction to that move, or to that news anyway. And you can see it pretty much across the board. That's the DAX. Actually, that wasn't the DAX then, was it? 3 a.m. So this is a CFD anyway. So the futures dropped off on the DAX. The UK, same. So it's the US S&P, that's the FTSE. FTSE didn't get hit as hard. And news out on the FTSE where, now who was it? Someone out of the ECB, I think, was talking up a deal, and then Irish, was it finance minister, come out on Friday night and said, no, they're not close to a deal. So that's put pressure on the pound, added pressure when the US dollar was rallying. Also, you can see, I haven't got the pound up, but the pound sort of dropped off as well from the highs. But that was probably more, a lot of that's got to do with the earlier appreciation in the US dollar as well. And you can see that the Aussie continues to come under pressure. So we spoke about this, when was that? Way back here, and selling off. It's still heading south. You've got a key anchor that's just held here at about, 68.08 or 68.10 zone. Still pressuring the market lower. So whether or not this leg's extended enough as previous legs from 68.57, where it's extended down here, there could be a bit more extension. We could be heading all the way south here. Now, this is what, if you were bullish on the Aussie and you're looking for a buying opportunity, you wouldn't really like the fact that it's from this low to high, it's retraced probably over 50%, maybe 60% of that move. And like we said before, the deeper the correction, the more likelihood you're going to get, you're not going to get a bounce, or you're not going to get some positive action. it's not as positive a market on the Aussie dollar at the moment. If you get this sort of pullback and it's holding up in, say, the top third of this leg up, then that's a strong move. It's looking like it's going to show some more signs of strength later on and rally, through back up through the highs. But instead, it keeps coming down, keeps getting pressured by, I guess, trade talk or whatever. It's not coming through, and the Aussie the way that Aussie reacted, you can see it pressured down. Now, what's this? This is about, it's 3 a.m. So it pressured down. The US dollar was actually strengthening right through the European session, but this weakness started about the same time. So that's about 5 o'clock is about when the US dollar started rallying. So it put pressure on, your major pairs, the euro, the pound, the Aussie pressured down, but it didn't. Once the US started bouncing, US dollar started bouncing sort of after the start of their session. It was going up. It started to pull back a bit. The Aussie sort of holding on to those losses, so it's holding the lows of the session, which is not a good sign when you're talking about trade wars. It looks like the Aussie's preparing for this to be a bit more prolonged than what you think, or it's just setting up for a massive short squeeze down the track. So we'll have to wait and see. You got the markets. The Dow was up about 100 from the close on Friday. The S&P is gapped up in the open. All markets seem to have gapped up a bit. Whether that's just a bit of a, they position themselves short into the end of the session and they've just been stopped out, or it's just cleaning out on the open. Gold actually pushed up into the close of the US session on Saturday morning, and it's gapped down slightly, ever so slightly, but it's still, all in all, to me, this is still bullish action. And I don't think, even if we get a bit of a pullback, we hold, I really doubt that we're going to get, serious negative action on gold, a serious closeout, considering all that you've got tension still in Iran and the US, between Iran and the US, that could kick off and cause major issues in the Middle East. So that's tension on higher oil prices. You've got obviously the problems with China and the US, they're still going, and I think markets probably wrongly expected that to get sorted out sooner rather than later, which I think that news out on Friday has sort of shown that no, they've still got some issues, and that's going to be prolonged a bit further than what we expect. Doesn't matter what they say. I mean, the market's got to realize that it's action, it's not just talk, and the market's reacting to talk at the moment. So if they don't continue and they show signs of cracking, the market's going to react back lower, you would expect, like it did on Friday. So there's still quite a few headwinds out there, and I think that's going to play into the hands of gold and higher prices, potentially an easing back up to 1550, at least pushing back up to these highs, maybe retest those highs. We'll have to see going forward what's going to happen. So we've got all that. Let's just take a look at, now we've got the SPY. So the SPY is pushed back up. So that was pretty much a flat session. So from the open to close on Friday night, you can see we closed down here. We pushed up straight back down to, so the session on Friday night pretty much built a minor lower high below 67.60, the day's highs, and that was around the open, I think. Yeah, that was just around the open. So the markets popped up from the open on Friday and then sold off into the close, and we saw a big bounce overnight until pretty much dropped on the back of that news on China. So we've actually opened back up, and the market's a bit of a washout of these up towards this level again. So it will be interesting to see. Just go to 5 minutes. So with the close, you're expecting the ASX to open roughly flat, because there's no real movement from the 4 o'clock close. No gains or losses from the 4 o'clock close on Friday afternoon. So the ASX on the back of that you would expect to open flat, but the fact that we've opened up, we hold around these highs. It's not just a big flush, because a lot of the times you get a big flush out, and you get, with this type of move up here, you can get easily reversion to the mean, or somewhere back down here, say 67.30, which is about a 10-point drop. So it's looking at the moment, if it holds up here, we're going to open up somewhere around the plus 20 point region. If we can hold around here now, if this is a big flush, you'd see this come down quite soon, I think, or you'd see it maybe chop around here. What it will do is build up a few buyers that thinking, okay, things are rosy, all the markets are opened up positive, build up a few buyers, and then come into the 10 o'clock or say 5 past 10, squeeze them out on the way down. All right, so we'll just see how it goes, guys. At the moment, just taking into account, just see if that can open up 10 or so. Now, what did we do Friday? I don't think, while we're waiting for this next, just see where the SPY over, sorry, the ASX opens. We'll see what we did Friday. I actually traded. I think I did trade Friday. I'm not sure now. Here we go. We've got something here. So what was that? Friday was the 20th, wasn't it? No, so I didn't trade that Friday, but I did mark it up just in case. I like to mark up what moves. I was looking at this move, but it sort of had me stumped. So I think the previous move that we had that did trade was off the back of. So this is the previous session, big stretch up on the open, and then you got the M pattern. We've spoken about that M pattern, and that's basically a minor lower high, and you're looking at that reversion to the mean. Okay, when the market gets extended away from the averages, and that's this, the middle one's a 20 MA. Once it gets extended away from there, you're looking for some sort of reversion to the mean because you don't really want to be a buyer up here, but you want because you're so far stretched. You know that market's going to flush a lot of these longs, and you're going to get retail longs caught. Retail shorts will be caught here, and then they'd flip over and get caught long, probably up here. So there's going to be a few people caught, and they squeeze them back out, just on that reversion to the mean. So you're not really looking for a massive move all the way back down to the lower average, which is going to be say 20 points or 30 points or so. It's just that reversion to the mean, and then see what happens. Now, if there is weakness comes through and you're on the right side, you're short, and it keeps coming through, just barrels through that 20 MA, then fine, you're short. You just look for CFA, you can follow it down. So I got the 7 points. I think it's 7 points out of this move on the way down, and then it just sort of bounced around. It was actually around here. I think it was shorting it, but I don't know. I think I probably had my biases towards the market at that stage, thinking, no, it's going to. It actually looked like it was going to bounce. You got this here sitting on top of the MA, pop up, lower high, come back down and retest, start to lift. So that would have dragged in a few buys. It was looking technically like probably another buy and push up to the highs, retest the highs. I found that kind of unlikely. So I was looking, there's potential to get all these longs that built up through here. And there's quite some time, was that from about 10:30 up to about 1. So there's quite a few longs that would have been built up here. Probably not squeezed out in this little move down. If you bought it here, you pushed up, you may have taken some off. Then it's come back down and retest. Not really put you under any pressure just yet. And this little pop up, you might get people adding to positions, or they missed this move and got in here on the breakthrough. If you can see just these little minor highs through here, pop up and then turn around and squeeze them straight back out with a move down. So all in all, what we saw on Friday was slightly different. We got this pop up on the open, and I was looking for an M pattern. So you wanted to see this as a lower high, but for me, that was probably quite a deep correction. You wanted to see it, maybe spike low and pop back up and then hold below this previous high. You can see just in here. Actually, should go to the chart. It's probably easier showing you on the chart, isn't it? Was that it? I'll get back to the picture. I'll probably muck that up a bit. So you got the market that's popped up. Then it started holding this inside level, and then once it got through the highs, you can negate that M pattern. It was more of another pop high, and the market hadn't finished just yet, pushing to the highs, and that was just after 11 o'clock. So I think we had some numbers in at Friday at 11:30, so I'm just waiting probably for those numbers to come out. But as we had it, this was probably the only real setup, but I wasn't quite as confident for a reversion to the mean, because you can see it's popped up, and the average is more caught up to the market rather than that spike higher, really stretch higher than come falling back down again, like we got from the previous day's action. But what you did have on the side, this is more of not really a reversion to the mean, more of we say an inside out. So you're looking for something that's either going to sit on the MAs and go back up, or fall away to the lower end. So it was sitting around the average, and you're looking for that expansion type of trade or continuation. So it was just sort of in the wrong spot. I didn't really trade that. I was watching it thinking, potential sell. We've got this green candle. Then once the red popped up, it was just a lower high off this this high here. So it is in some ways an M pattern. And then it got a bit of a sell off, but didn't really go too far. And it was a grind after that. So all in all, I probably would have taken off only for a 3 or 4 point gainer anyway, if I did get into that. So let's see that market's holding, which is interesting. Let's just see what we've got on the open at the moment. Up 2.5. So don't be surprised if it opens up 15 to 20 points today. So we'll see. Any questions there, guys? Anything you're going to look at quickly? You've got a minute or so, and then we'll probably just call it a day. Sort of give you 5 minutes to see how this opens. So I don't really have any plans for today, to be honest, on the on this market. If it can hold up here, what you don't want to see, I'd rather see this extension on the open than you've got this big gap potentially to fill. Now, if the ASX doesn't open up as strong as what the SPY is suggesting, there's a potential short on. You can get something after the, coming into the 10 past 10 move, potentially. But this candle is quite large. It looks like it's having another go at the highs. It's an expansion candle. It's not really an indecisive candle like you get, say, when the markets get a bit more indecisive before a move, before accelerating one way or the other. You tend to get tighter candles or narrow range candles, but you haven't got that here. So you've got quite an expansive side of a candle, and it could be still putting pressure on the highs up towards, testing towards that 57, 54, or even up further to 67, 60. But at the moment, we're sort of in no man's land until we see what's happening more on the ASX Open. ISX will do. Does that make sense anyway? Let's just see where ISX and right here. Yeah, that's copped the beaten of late. And that's all. Personally, I don't like to look at fundamentals as much as what I probably should, but that to me, this is all based around your fundamentals. It was governance problems with, I think, ISX, and they're not looking good. They've been smashed on the back of it. Now, they're smashed more because it's gone so high. The market had powered along. By the time you got to this candle on the 10th of September, and then you started cracking where, there was potential that they pushed it higher to finish it. I think they had to finish above a certain level. Wasn't quite sure. Certain level to be able to exercise options or to get the performance rights. I think that was the case. Now, it did, and then it crashed, and then that news sort of broke, and the market's going, that's a bit dodgy, it's a bit seedy. That to the market, it's saying that managers are trying to hold it up. It's trying to get buoyed, so they can get their performance rights, sell it to market, away they go. So if that's the case, the market looks at like, more liquidity come on. They're going to sell it back into the market. Let's bail because we are at highs. We're at $1.50, and if you've been riding this up from 40 or 50 cents, even around this zone when it started popping up, or even around $1, you're going to be quick to get out. If you're sitting around $1, you bought it on that move, and then all of a sudden you get this big red expansive candle. So that's not this one candle. If we go back, this one candle negates a couple of days action, a couple of days positive action, and that's the biggest sort of negative red candle that wasn't getting soaked up by the buys than you've seen pretty much any time in the past. So once you get that red candle coming out, if you just waited for the close there, you're probably going to be bailing the next day. So you get that second day action on the downside, and that really started expanding because that sort of candle suggests that buyers, where are they? Where are they gone? Buyers have basically disappeared. Whereas previously they were soaking it on the way up. So that candle there, that one sort of candle is a bit of a heads up where, hey, where are the buyers gone? If the buyers are gone and you're reading about that news, you're finding out about that news, then that's a good sign that, hey, it's either right and it's getting soaked up. It was getting supported and they're right, and then now there's going to be liquidity come on from the rights. They're going to dump on it, or just for the sheer fact that it's on the highs. And if that's the case, it just opens up a can of worms, I think, with that kind of news hitting it at that time. Whether they say it's right or wrong, it's not right, it's not justified. But the problem is, you're never going to know anyway, and the market's going to decide for itself, and it did. It's pretty much sold off quite heavily. So either way, ISX, if it's a solid fundamental company, then yeah, it could be a buyback down here because that's a massive flush out, and you can see the volume that's come through. It's flushed out quite a lot, and technically, it's looking like I wouldn't say it's done yet. A couple of big days, big weeks of volume. It's 2 weeks, was it? So it must have been on the end of the week, and then what was that first candle? 11th, 12th, 10th, 11th, 12th, 14, 15, 16. Okay, so a couple of big volume weeks there. It's smashed it back down. So the weekly, I don't like that move at all. And I think once you've got that move, you're going to get buyers are going to be very hesitant to jump back in here until something sorts itself out. So I would suggest you're wanting something just to calm down a bit. So I wouldn't, even with this bounce, I would suggest that maybe there could still be more to come. That's a big rejection candle there, and I think they popped out with some news, if I'm right, a few days in response to ASX queries. So that's sort of easing investors once the ownership matters. But, still, they've probably got quite a few issues they have to get through. What day was that? The 19th. So when's the 16th? Some news came out on the 16th. Okay, so they had news out on the 16th. It bounced the market, and the market's got powered straight back through the lows again. It did reject it on the 19th, and I think there was news out on the 19th. Is that right? Your response to it. So that was, I think, that news coming out. It's either what it's done is two things. You can't just say that it's bought buyers into the market. It could have taken out the short sellers, because there would have been quite a few short sellers. And I know there was quite a few guys that I follow that were shorting into that quite heavily. So they would have cut positions potentially. They're edging in and out of the market on the way down. So that might have cooled them a bit. Probably brought in a few bargain hunters looking for that bounce too on the other side. So intraday traders still are looking for that bounce potentially. But whether or not we're going to get news that's going to buoy it, come back out, and it's going to start settling it down. But you want the volatility. Essentially, I would be looking for the volatility to come out of that market before I decide what I'm going to do. At the moment, I'm not interested in shorting it down here, and I wouldn't be interested in buying it just yet. If you're long, depending on where you're long from, you have to be thinking about it. I think they've got a fair bit to get through on the news front to try to help buyers, I guess, or support buyers. So we're up nearly 20 at the moment on the ASX. This is another one, RFF. So that's one that came out with some news on a big shorter saying they're rubbish, and they got smashed on that day. Bounced all the way back up, and it's come all the way back down again. So there would have been some bargain hunters as the company itself or RFF come out and started talking it up, saying we're not this, we're not that, we're fine, da da da. And then it gets to a point where there's some bargain hunters. If you're short in here and you didn't get out, you're holding it, you're just licking your wounds a bit. And then you're going to get the bargain hunters who are going to step in there. No matter what, they'll step in and have a bit of an intraday or maybe a swing overnight or a couple of day trade on the long side, because it's so tantalizing way down here from when you're talking $2.40, it's dropped $1 down to $1.40. Yeah, it's a massive beating, and there's going to be some sort of bargain hunting in there. And then the market pushed it up. Then you get to that point where it's equal weighted between buyers and sellers. You get that point of agreement where, okay, if you're long off the lows, sooner or later you're going to start to think of getting out. If you didn't get out from the highs and you own it, you're going to think of just closing your position as well. So to me, you get to that point where there is potential for that increased selling pressure to come back in, which it did. It come back in. That's probably news driven, that fall off the side of a cliff there in the last few days into the end of last week. But you can see that sort of grinding back lower again before we get that big sell-off. I think something else broke about RFF, or someone else come out with a research report saying that they're not that great, which has just got for anyone that's holding it through here, that bought it anywhere through here, and it's been gradually on the rise, and then they held it while we got this massive sell-off. Here's your opportunity to minimize your losses, potentially minimize your losses. Once you get to here, you start realizing it's not going to come back up to 240. You're not going to get a break-even trade. It's spiked and rejected 210. You're going to be bailing pretty quickly, or you should be if you're trading it anyway. If you're going to hold on to it, good luck to you. All right, so 10 past 10, we're up 30 points. So that's not a bad open actually, which is, I do find that kind of surprising, which would suggest this is the SPY. So we've got the day's action around here. We'll just see how it goes. I'm a bit suspect of the strength in the opening on our market and then selling off into the close. Whether that's some bigger positions, I'm just getting suspect. I'm a conspiracy theorist when you're talking about that. The market opens up strong and it sort of pops up on the open, a bit stronger than what you expect, and you're going to get, you heard the saying, retail open, professionals close the market. Retail might open and get a bit excited. The market pops up and they sell into it. Okay, it pops up, they're selling into it. Selling in the strength, and rather than buying on the open, they don't tend to do that. They've got a lot of volume to get through. So yeah, I get a bit suspect of these opens when they pop up stronger than what you think on the open. Where's gold? Gold is still hovering. It hasn't really moved. Wall Street hasn't really moved. So we're just sort of playing catch up to the indices. The indices open. All right, guys, better call it a day there. I'll be back on at 12:30. Banks are strong, are they? Yeah. So ANZ's up 0.5%. Not too bad. Up 0.1. It's not really strong. CBA is probably 0.3. So yeah, they're a bit of strength into the banks. All right, guys, we'll call it a day. I'll be back in at 12:30. We'll do a live stream. So just remember, if you can, if anyone wants to, just put up some charts of some trades you've got. where you got in, if you can mark it up and you want to shoot it off and you have a bit of a discuss, or if there's something else, discuss an entry or something like that, a style of entry or your type of entry. Just it's always going to help out. If you don't mind putting it up, then I can whack it on and we can talk about it. It could be in anything, if it's something on a currency, a currency trade you've got. I know we've got, is it Bobby sends me through a couple. You got up there last week. Or if there's a futures trade, if there's an index trade or anything like that, it's good to discuss because realistically, the way I look at the market is similar across the board, with buyers and sellers, strength between buyers and sellers. So, the way I'm not looking off levels, and I think it's always going to help you of getting a better understanding of what, the interaction between buyers and sellers. Obviously, with stocks, it's a little different because it's sort of biased up. But yeah, it's always worth having a bit of a chat about. RFF is going a bit low at the moment, not too crash up. All right, guys, we'll call it a day. Yeah, if you do have anything, just email it to support@tradesetup.com.au and we'll chat about it. Otherwise, I'll find some more of my own stuff to have a bit of a chat about later on before we go over some shares. All right, guys, enjoy your day. I'll speak to you later on. Bye.